Introduction to Japanese candlesticks. Japanese candlesticks have been used by Japanese rice traders since the 1700s. The father of Japanese candlesticks, Munehisa Homa, a rice trader from Sakata, Japan, developed this method of reading charts that was unique and incredibly successful. It was so successful that made Homa and those that followed this method legendarily wealthy. In the 1800s, the system was further refined and improved. 300 years later, candlestick charts are still used by traders and investors around the world. What are Japanese candlesticks? Japanese candlesticks are the visual illustration of the collective knowledge and decision-making of all investors during a specific period of time. They show us the full picture of all information reflected in the price action as it is developing right now. What makes this method so successful? Candlesticks don't tell us why the price action is happening, news release, earnings reports, etc. What they tell us is something much more valuable, which is what is happening in investor sentiment of emotions and decision-making. Candlesticks reveal a unique type of information that no other indicators does: human emotions. Think of candlesticks as market psychology indicators. What does the market have to do with human emotions? Everything. How well a company is doing in the market has little to do with how well an investor can make money in the market. In fact, price action is mainly the result of how well a company is perceived to be performing versus what the real value of the company is. Therefore, investor sentiments are a huge factor in their decision-making process. The emotions of greed and fear, especially, are major contributors that cause investors to be exuberant and buying at the top, or to panic then sell at the bottom. Candlestick charts give the visual illustration of the decision-making process of major market players and highlights the emotions influencing their decisions. The visual illustration provided by candlestick charts give candlestick traders the ability to see when the overall market sentiment is changing and to quickly act upon that change. Candlestick traders can position themselves on the right side of the trend and profit from a price action, influenced for example by a news report released 3, 5 or 7 days later. Knowledge of candlestick analysis combined with technical analysis, support and resistance, trend channels and moving averages, give candlestick traders the ability to identify the current market trend, recognize a change in market direction, and place trades with greater confidence and greater results. Also, the visual illustration allows candlestick traders to recognize trades that aren't working and to get out of them with minor or no losses before suffering greater losses. Moreover, candlestick analysis will help candlestick traders and investors to trade and benefit from uptrend markets as well as downtrend markets.